Are you a current or future physician assistant wanting to learn more about finances? Then join me on this journey to become a PA the FI way. Hi, my name is Kat, and I'm a practicing certified physician assistant who will be your host. It took me 5 years after I started practicing medicine as a PA to thoroughly dive into my personal finances after I discovered the concept of financial independence. I want to use what I have learned to help you avoid some of the financial mistakes that I have made while sharing some of the financial wins that I have had along the way. Join me as we discuss financial strategies to guide you to becoming a physician assistant on the way to financial independence. Welcome back to the PA the FI Way podcast. I'm your host, Kat, and I'm so excited for today's episode. We have a very special guest. We have Andrew Paulson. He is from studentloanadvice.com, and he is going to share with us so much information about student loans because, as you know, we as PAs unfortunately graduate with a fair amount of student loan debt. So I'm really excited to have him on the episode. So thanks for joining us today, Andrew.
Thanks, Kat. It's a pleasure to be on today.
Yeah. Do you mind sharing a little bit about yourself?
Sure. So I grew up in a large family, and both my parents worked in finance. And I grew up for a time wanting to be a professional golfer. And then I reached the collegiate ranks and realized that there was only about 200 people that were on tour, and there's about 50 million golfers in the U.S. And I kind of ran those numbers and realized I wasn't going to make that my career forever.
Wow, nice.
And so that was a little bit of a tough realization at the time because I was focused on athletics over academics, but I realized I needed to start shifting my focus into academics. And, growing up, I'd learned about businesses. And so I was like, oh, that's what I should end up doing. And I've got 3 younger brothers. I was really the only one who took to that and was interested in finance and investments. And so, in school, I naturally studied finance and accounting and really wanted to get the foundation of a business because that's what accounting teaches you is how does it work? What are the nuts and bolts? And, just along while I was in school, friends and I were really interested in the stock market or in retirement accounts. And I really had an affinity and a really interest in that. And so finished up my undergrad and my master's degree in accounting and got a job in the investment industry. While I was in school, I also met and married my sweetheart, my wife, and she studied nursing.
Nice.
And while she was in school, she had to take out some student loans. And I was fortunate that I had a lot of scholarship from being an athlete, that I didn't come out with large student, I didn't come out with student loans, but she did have some student loans. And, we had to kind of figure out what to do with those. But anyways, we both finished up schooling. We moved to the East Coast, and I was working with large institutions helping them manage their money. And a little while after that, a colleague of mine, Brett Stevens, who works at the White Coat Investor, reached out with an idea. So, I had grown up, interested in finance, reading finance books, and the White Coat Investor, we actually had their book on our coffee table for years.
Nice.
And so I was familiar with the company, the platform, and their mission. And so we discussed this idea of creating a company that was focused on student loan advising, as so many of their readers and listeners, like yours as well, were making big mistakes on their student loans because they come out of PA school, they come out of medical school, and they have so much student loan debt. And it's super, super easy to make large mistakes. So I was really this was a great fit for both parties, that I was looking for the opportunity to start a business, and I had a background in finance and knew something about, healthcare, my wife being a nurse, and also having some student loans and experiencing that firsthand. And they were looking for somebody with that profile. And so we started up the company, studentloanadvice.com, in January this year.
Awesome. That's such a great background story. Thank you for sharing that. The White Coat Investor has played a huge role in my financial journey as well. So I absolutely love the company and their podcast and blog and all of their stuff. So I think that it's great that you're affiliated with the White Coat Investor as well. So thank you for sharing that background. And then, Andrew, in addition to your master's degree in accounting that you mentioned, you have also earned your certified student loan professional designation. What all does that entail, and how does that set you apart from others in the industry?
So the Certified Student Loan Professional, or the CSLP as they call it, is a designation in student loan advising and really the gold standard in student loan advising. So it's really about a month-long program with a certification exam at the end. And this was a perfect fit for my background, being able to utilize my understanding of finance and spreadsheets and understanding of student loans. And this really helped me round out my knowledge very well to be able to give people advice and to be able to give them recommendations, catered to their individual situation. And how does this set me apart from others per se, or differentiate? Well, a lot of people that I'm differentiated from most others who provide student loan advising, because most student loan advisors are financial advisors,
Okay.
and their main goal isn't just to get, they want to help you get out of student loan debt, but it is to actually convert you into a financial planning or a financial advising client.
Sure.
And that's their business model. That's how they make money. Whereas our company mission is solely to help you tackle your student loan debt and give you back that time to focus on the things that you really care about. And all I do is these one-on-one student loan consultations. So I don't have any conflict of interest outside of the student loan realm.
That's wonderful. It's almost as though you are kind of a fee-only company to work with versus, eventually going into the assets under management in the future. So I think that's great for sure. Great model.
Yeah, absolutely.
And then student loan debt in the U.S. totals over $1.71 trillion. Why do you think that there's such a huge student loan crisis in our country?
Yeah, it's a scary number. And I think that one of the first things to mention on that is student loan debt is second only behind mortgage debt in the United States. It's bigger than credit card debt. It's bigger than auto loan debt. So it's definitely a big issue. And I think one of the first reasons why is schools can charge basically whatever they want. When you're going into PA school, you're in a professional degree program, they can charge you $50K a semester, maybe even $75K. And if you're living in an expensive area, you're taking out that $50K for student loans and then to subsidize your housing, which could easily be, another $10,000, $20,000. Yeah. So that's the first thing, is they can charge whatever they want. Secondly is I think students don't always pick a career that has a good return on investment.
Sure.
This isn't the case for PAs, right? You are getting an excellent return on investment on your education because you're coming out of a PA school as a high earner. But I think a lot of people, they get into school because that's what everybody does. When you finish high school, you're supposed to go to college, and there is, and I think a lot of people should, but some, perhaps are going for the wrong reason, and they get degrees that don't end up earning them enough money to pay that down. And that's why there's a lot of people that are in tough positions right now on trying to pay down those big student loans. And then another one is student loan repayment is extremely complex.
Exactly.
So when you have federal student loans or you have private student loans, the interest rates are different. The repayment plans are different. The forbearances, all the different pieces and aspects are different. The rules are different with each of them. And so this is a tricky process for people to navigate. And it's usually something that they just kind of sweep under the rug once I get done with school. Actually, once I've landed, a lucrative job at a school or at a training, maybe I'll figure it out. And it often gets kind of pushed off to the side. And so that's a big thing. Another reason why people, it's partly a crisis because it continues to grow, and they often don't know that they're paying 6, 7, 8% interest on these student loans.
Yep.
If you had $100,000 student loan debt, which is not uncommon for PAs, and you have an 8% interest rate, well, those loans are growing $8,000 a year. Mm-hmm. And, if you put them off for 5 years, that's like $40,000 extra dollars that's sitting there that you have to end up paying off. And then one of the last, I'm not encompassing all of them, but there's been a large increase in tuition over the years.
Sure.
And there has been increases in income, but it has not been commensurate with the increase in tuition. And so effectively, it is getting harder for people to afford college, with inflation and different costs like that.
Yeah, definitely. Thank you for sharing all those perspectives. I really appreciate it. I think that there are all great points that, unfortunately, it's very important that people really take into consideration what they want to do, not just go into school without a plan. Are you sure that you want to be a PA? Are you sure that it's something that you want to spend the time and money for? And then make sure that you are trying to go to a college that isn't outrageously expensive. Unfortunately, sometimes when you're applying, you might only get accepted into one. And if the cost is outrageous, you have to decide, do you apply again next year, or do you go ahead and spend the money and then perhaps consider different repayment options down the road and talk to yourself about those options. So it's definitely lots of things to consider. And then, Andrew, the student loan pause is set to expire January 31st, 2022. The people who've had federal student loans for this whole time have certainly benefited from a lot over the past several months. But what suggestions do you have for our listeners to prepare for this date?
Yeah, prior to payments resuming, there's a couple of things you need to do. First off, make sure your information is up to date on the studentaid.gov website. That's the federal website where they keep track of basically all your student loan information. And each of you also has a student loan servicer. So make sure that your information is up to date on your student loan servicer's website as well, because you should anticipate email and mail correspondence from them.
Sure.
And then, the second thing is, if you were enrolled in auto pay prior to the pandemic in March of 2020, make sure that your auto pay is set up again, because, for most, it's not automatically going to kick in come February. You actually have to re-opt in a lot of situations. So you don't want to come up and then end up missing payments or going into forbearance unnecessarily, as that can be detrimental to you. And then also, it's probably a great time for people to make sure that you're in the right repayment plan. Some of you should be looking to private refinance. Some should be considering some of the loan forgiveness programs like public service loan forgiveness, or perhaps being on an income-driven repayment program. So, I know a lot that have graduated since the pandemic. They haven't really had to make payments. They haven't really had to figure out what repayment plan is. So it's a great time to figure out, where should I be going? What payment plan should I be on? And, if you're absolutely certain about private refinancing your student loans, so this means converting your federal or your current private loans into a private student loan. And one of the large reasons why people do it is because you can get a lower interest rate typically. So most of you who've been borrowing recently with federal student loans, it's going to be somewhere in the 6 to 8% range, I'd assume. And also, if you took out some private student loans, those can be really anywhere from 2 to 12%, where they have some variable interest rates sometimes. Yeah. But, so if you are going to look at private refinancing, because come February, those federal interest rates are going to kick in, you can get quotes from private lenders.
Sure.
And hypothetically, if you wanted to start making payments in February, you can get quotes in January, and they usually give you a 30 to 60 day period to decide if you want to move forward on that. And, the biggest reason why is going back to that example of $100,000 of student loan debt with an 8% interest rate. That's $8,000 of interest that you have to pay before you're going to start paying down on any of that principal balance, whereas you could probably get it down to 3%. So that's only $3,000 a year, which that's saving you $5,000 a year, and over a 10-year period. That's a huge amount of money that you can end up saving just through understanding, if private refinancing is a good route for you.
Exactly. Yeah, those were all excellent points. And in the vein of private refinancing, I made many financial mistakes right out of PA school, and that's one of the reasons why I started this podcast in my company. But one of the huge financial mistakes that I made as a newer PA was that I did refinance with a private lender, which was SoFi. And I don't view that as a financial mistake. I did not have someone like you be able to walk through everything with me. So it's possible one of those other repayment programs might have worked a little bit better for me, but I still felt comfortable with my decision to refinance. However, after I refinanced with SoFi, I paid on my student loans for many, many years. I believe about 5 years, until for some reason it dawned on me, why the heck did I not refinance again? So that was a huge financial mistake, where you can refinance your student loans with a private company, whether it's the same private company or a competitor, multiple times as you're paying off those student loans. But my question for you, Andrew, is how frequently do you suggest that PAs review the interest rates on private student loan companies and consider possibly refinancing their loans again for lower interest rates as they're paying off their debt?
Yeah, and Kat, you're not alone in
Sure.
this. I think a lot of people make that mistake. A lot of people just keep their federal loans because they don't really know that there's something out there better for them through private refinancing. And usually I'm talking about those of you that are not considering non-for-profit or 501c3 type jobs. Okay, you're working in private practice typically, and so, how often should you be doing it? I would, you're looking to private refinance your student loans. I'd probably check like once a
Sure.
year, just as, or if you had a significant life event, like you got married, you finished a training, or you moved jobs, you moved from a nonprofit into a private practice, any different types of life stages that come up can end up being beneficial towards private refinancing, because what they look at when they're offering you terms is they look at your income, your job history, your savings, your credit, and they factor all those in. So if those things change, like 3, 4 years out of school, you were in a much better financial situation, I assume, right? You had
Definitely.
paid down a huge amount of your
Yep.
debt, and well, at that point in time, those private lenders are willing to give you a much lower rate, because now you're in a position where they feel a lot better, right? Where you're not going to default on your loan, or hypothetically, because that's the risk that they run with anybody, is when you private refinance, they're taking risk on you that you're going to end up paying that back.
Yeah.
So like I said, I'd say probably about once a year I'd try that. Or then if you do see interest rates dropping, up until this year, really, we've had rates going down for a number of years, and I've had clients that they private refinanced at like a 3-year interest rate, or a 3% interest rate rather, and rates went down to a point where they're paying like less than 1% on their student
Wow.
loans. And the timing just worked out. It doesn't always work out that way. But, if rates did drop, you could look at it. But we're kind of in a time right now that it looks like inflation is starting to really push up. And the Federal Reserve, who controls interest rates, and then the student loan interest rate is based off of basically whatever the Federal Reserve says it is, then it will probably start to tick back up, I'd say, over these next couple of
Sure.
years.
Yeah, definitely. And to the point of, you're probably in a better financial situation a few years after graduating too. Your income is probably higher at that point as well. So usually you start at
Yeah.
somewhat lower of an income, hopefully not too low. You should obviously always try to negotiate. But then with time, you often get a little bit of a raise, or if you do switch specialties or switch to a different employer, then often your income's higher. So you can often get a better interest rate with the higher income too, depending upon your whole financial situation at that point.
Kat, I was just going to say, like, one other thing that you just need to be aware of when you do private refinance your student loans is federal loans have a number of protections. Like, your payments can be based off of your income. There's a plethora of loan forgiveness options, one of which we'll talk more about, which is called public service loan
Yeah, definitely.
forgiveness. And also, if you pass away and you can't practice medicine, or no, you pass away or you become disabled and you can't practice
Sure.
medicine, your loans, when they're federal, are discharged tax free.
Yep.
Okay. Once you do private refinance, you can no longer go back to federal student loans. And generally, those payments are fixed, and they're based off of whatever the loan size is. Maybe probably $2,000 or $3,000 or $4,000, whatever it ends up being. And there's less flexibility on repayment. And also, if you do pass away or you become totally or permanently disabled, usually those loans are discharged, but they're discharged tax free. And some don't even have a a provision in place where they're discharged tax-free, where you actually have to end up paying the entire balance. And that usually falls on the shoulders of a spouse, let's say, if they ended up co-signing with
Sure.
you. So just another little something to consider when you're going down that route.
Definitely. Thank you for pointing that out, Andrew. It can be very appealing to refinance with a private student loan lender, especially when you see those low interest rates and you think that the company looks good and see all their commercials on TV and things like that. But it is a huge decision. Those federal student loans, even though they have higher interest rates often, like you said, they can certainly have a lot of benefits. So again, I think that having somebody like yourself to talk to go through this process of analyzing your particular situation is so important. So thank you for pointing that out. And then as we mentioned, PAs often graduate with over 6 figures in student loan debt. Not all PAs, but many PAs do, sometimes almost as much as med school debt, depending upon where they went to undergrad, where they went to PA school. How can these new grad PAs initially evaluate their loans and decide what strategies to use to pay back their loans? Because there's so many options.
Yeah, definitely a loaded question, and I'll preface it that it's quite unique for everyone's situation. If you're single, or you're the sole earner in your household, or if you're a dual earning household, it can get more nuanced, from into those individual situations. But I would say that the first thing that you need to ask yourself is really two questions: is what is your debt to income? So think about, if your debt's $200,000, that's your student loan debt, and your starting salary is going to be $100K.
Sure.
Right out of PA school, that's a debt to income ratio of 2 to 1. Okay, that's just an example. And then the second question to ask yourself is, what does your employment or future employment look like? Are you going to work in a nonprofit, or are you going to work in a private practice? Because that decision also can determine what repayment plan that you should go on. And the two main ones that I see PAs doing are private refinancing their student loans like you did, or doing public service loan forgiveness. Okay. And there is one other case that people will do that's called taxable loan forgiveness, that instead of it being a 10-year payment plan, you're on there for about 20 to 25 years. But I only see people doing that if their debt to income is 3 or 4 or 5 times.
Sure.
So you're coming out of school and you're making 150, and your student loan debt is $600K, let's say, something like that. That's where and you're not going to work in a nonprofit. That's kind of the only case I see people looking at taxable, just because it's not like public service loan forgiveness where you make 10 years of payments and then your loans are forgiven tax-free. Well, actually, after making 20 to 25 years of payments, whatever your loan balance is at the end of that period of time, that is added to your tax return.
The tax bomb.
And then it gets taxed. Exactly. It's the tax bomb. So let's say it's $300,000 and you're in a high tax bracket. I'm just using a whole number, 50%. That's a $150,000 tax bill. It'd be somewhere in that $100K that you'd have to pay in a lump sum that year. But kind of getting back to, how do you figure out what to do and which payment plan to be on? If your debt to income is 2 to 1, I'd say you should definitely look at loan forgiveness.
Sure.
So I'm talking about that situation of $200K of debt and $100K of income starting. Definitely look into public service loan forgiveness if you're going to be working in a nonprofit, because the numbers almost always work out in your favor in that case. Now, when your income and your debt becomes more level, like maybe 150K of debt, 150K of income, it's a little bit more of a toss-up. I'd still consider looking at loan forgiveness, but in the cases where your income is more than your debt, you can probably private refinance and just pay those down in a speedy manner, and that'll be behind you quicker.
Sure.
Okay.
Awesome. Thank you for sharing that.
Yeah, and factoring in the employment, if you're planning to work at a nonprofit, you should definitely consider PSLF, or public service loan forgiveness. And if you're planning to work in a private practice, that's where you wouldn't qualify for PSLF, and you'd most likely need to refinance.
Yeah, exactly. Before we go into a little bit more for PSLF, for those details, do you mind clarifying that the taxable payment programs are IDR plans, correct? I just wanted to clarify that for the listeners.
Yep. Those are IDR plans.
Yep. Okay. Thank you for that. And then, so we did touch on PSLF, but do you mind sharing kind of a brief overview about what this program is? And then, like you said, which PAs could actually benefit from it? What type of employers they would have to work in, how PSLF works, the payment length of time, those types of things of the program.
Mm-hmm. Yeah. So, starting with, the basics of PSLF. So it was really enacted back in 2007 is when this came up. So it's still generally new. And there's a couple of requirements there's really four main requirements. Number one, you have to have qualifying employment. So that means that you're working at a non-for-profit or a 501c3. So you can check at whatever job you're working at. You can just Google that and see what it is. And then the second one is you do have to be working full-time at that qualifying employer. And this is usually whatever your employer categorizes as a full-time equivalent. I think letter of the law is about 30 hours. But you could be working at two different qualifying employers part-time. And as long as those two employments net to full-time, then you would be fine to do that. You also have to be on a qualifying repayment plan. So these are called these income-driven repayment plans, where your payment is based off of your income. An example, if you're making $120K a year, well, that's about a $10,000 a month paycheck. 10% of that paycheck, so basically $1,000 would be what your monthly payments would be in an income-driven repayment program. So there's four income-driven repayment programs: repay, pay, income-based repayment, and income contingent repayment. And we see most PAs are looking at pay-as-you-earn and revised pay-as-you-earn. Those are kind of the newest, latest, and greatest ones. Little bit of nuances to them. We'll talk a little bit more about that later. And then you can also be enrolled in the standard 10-year payment plan as well. Those payments do count, but just disclaimer, if you make 10 years of payments in a standard 10-year payment plan, you would have paid your loans off completely, and you ended up just paying the 6 to 7 to 8% interest
Exactly.
rate. So don't do that.
Don't be an overachiever.
Don't just stay on the standard repayment plan. Yeah. And then the last requirement is to make 120 on-time monthly payments. If you fulfill those requirements, you would then be eligible to receive public service loan forgiveness, which is tax-free loan forgiveness. And, as I was talking about earlier, if you're planning on working in a nonprofit, I definitely consider it. The numbers almost work out in your favor if you do. And if you're a new VA who isn't going to do public service loan forgiveness, that's when you want to look into private refinancing. And talking a little bit in terms of who is this going to benefit, like we had talked about earlier with those debt to income ratios here, where if your debt is more than your income and you're working in a nonprofit, you should definitely consider look into the numbers, run the numbers. That's something that we do every day with people. So if you need help on that, we can help you. But if you're trying to decide and base your the employment based off of if you're going to do this loan forgiveness or not, I don't think this is the sole reason why you should work in a nonprofit, right? I think it's definitely something that you should consider, and particularly for those of you that take fellowships and take trainings out of PA school, this can end up helping you as well if you do loan forgiveness, just because you have a couple of years that you're not making nearly as much as you are when you're full blown out of training and out of school. But yeah, like I said, if your income is more than your debt, that's usually where I would look to private refinance, and where public service loan forgiveness is probably not going to be much of a value add for you.
Definitely. Yeah, I think that the point that you made too about don't pick your job based on whether or not you will qualify for PSLF is very important, because it's a decade of your life that you are committing to. So you want to make sure that you like the company, you like where you're working, you like the non-for-profit, wherever you end up. You don't want to just pick it because you can get your student loans paid for. You want to be able to see yourself working there for a decade. So I think that was a huge point that you made as well. Mm-hmm. And then, Andrew, PSLF unfortunately has a little bit of a bad rap sometimes. Do you mind speaking on that? Why have people run into issues with it? I know there have been some amazing success stories that Dr. Dolly has interviewed
Mhm.
on the White Coat Investor for sure. So it's an awesome program. But do you mind kind of sharing about some of the struggles about PSLF that people can encounter?
Yeah, it's no lie that the program has been a bit of a disaster, I think, for a lot of people.
Sure.
And part of the reason of that is you have to follow the letter of the law. You have to be fulfilling all the rules. And I think a lot of people, when this program was enacted back in '07, were like, "Oh, there's some loan forgiveness program. I'll just throw in an application, throw something up against the wall and see if it
Sure.
sticks." And it didn't. You had to have fulfilled all the different requirements to get there. And prior to 2010, a lot of you out there, when you were taking out loans for PA school, were taking what were called Family Federal Education Loans, or FFEL
Okay.
loans. Okay, so even though the PSLF program was enacted in '07, you could actually have received loans up until 2010 that were not eligible for public service loan forgiveness. And let's say that you worked for 10 years at a qualifying employer, you made all your payments on time, you kept track of all of that, and then you submitted a form right at the end to qualify, and they told you, nope, those loans don't qualify. You actually have to start
Oh,
over again,
man.
start from
Devastating.
scratch. And that's definitely happened, right? And there's been a lot of poor press on public service loan forgiveness. I think rightly so in some cases where it's been talked about that nobody can get it, that it's actually just a lie or whatever. But it does work. We have seen clients that are actually getting public service loan
Awesome.
forgiveness as long as they really dot their I's and cross their T's. And you have to be really committed to doing it. And if it is a value add for you, it's definitely something you should look into. And I think I also just wanted to share there's some news that broke last month that is on public service loan forgiveness, based on trying to make some changes and to improve
Okay.
it. Now, any borrower that made payments, let's say you were not in a qualifying repayment plan, you were in the extended, which is a 25-year repayment plan. Well, now all of those payments will count
Nice.
as long as you had qualifying. So all you have to have was qualifying employment. And then a lot of those of you who had these FFEL loans, payments towards those loans didn't count. And the only way to get those payments to count is you had to do a direct federal consolidation, which just consolidates your FFEL loans into the direct loans, which are currently the eligible loans. Well, in the past, if you did that consolidation, your payments start from zero again. You have to start over,
Oh,
which was really
no
frustrating
kidding.
for people. Well, now they've made it so if you've made past payments on a wrong repayment plan or on the wrong type of loans, all of those credits will carry over now.
Nice.
So if you are in the camp where you've been making payments for a while, you should definitely look into that. So, bottom line, they're really trying to improve this program. And, there is some risk that they could change it,
Mm-hmm.
right? I think in 10 years' time, it's probably going to look different, the loan forgiveness program, and even what the repayment plans are. But current borrowers would get grandfathered into whatever the changes were. If they were beneficial, you could opt into that. And if they were going to be detrimental to you, you could stay in the current system.
Sure. Sure. Thank you for sharing that. It sounds as though the PAs that could benefit from PSLF definitely need to be very detail oriented because, like you said, they have to keep track of those 120 qualifying payments. And throughout those success stories that I've heard, people have mentioned that sometimes, unfortunately, they're keeping track of the payments, but the people that they're, trying to pay will miss a payment. And so you have to keep track of that proof. So it's really important that if you're not a detail oriented person, maybe hopefully your spouse is or somebody that can help you with that, because it's really important that you do take the time to make sure that you aren't missing anything, keeping track of it. But even though it sounds like that might be somewhat of a pain, obviously there can be a giant payoff and reward in the future. So definitely thank you for pointing that out.
Yeah, and I would just say for those of you that are doing public service loan forgiveness, there's some changes going on right now in the student loan world. There's two large loan servicers. One of them is Fed Loan, and one of them is Navient, and they service 16 million people out there. And some of you are probably in the audience are getting your loan serviced
Sure.
by them. You're going to get switched to a new loan servicer at some point. I'd assume next year. And so if you're planning on doing a loan forgiveness plan, I would just try to get all your ducks in a row right now. That means filing those what are called PSLF certification forms and getting whatever past payment count credited to wherever you're at right now. Because if you don't, it might be hard for that new servicer to pull records up from a defunct
Sure,
servicer.
that makes
And
sense.
FedLoan is currently the only loan servicer that works with people that are on track to the public service loan forgiveness. So, make sure that you send in those forms, and also in terms of documentation, all you need is to have payment documentation that it just comes right out of your checking account, like that's where the payments are coming from. And so when they come back with issues and they've made payment mistakes, then you can send it to them in writing. Here were the payments that you missed, and because they'll give you a report of what payments are qualified and what haven't.
Great.
And that's the type of stuff that we look in depth in our consultations.
Awesome. Awesome. And then for the people who are trying to pursue PSLF, and just in case it doesn't work out for any reason, or let's say they're planning on, working at an employer for 10 years, but maybe 5 or 7 years down the road, they do switch employers and it doesn't work for them or things like that. What type of advice would you suggest that people try to do to help offset that risk? I've heard some people talk about like a side fund. Do you want to talk a bit about that?
Yeah, I just talked to clients yesterday that were in this situation where they had pretty big student loan debt and they were, looking to do public service loan forgiveness, but a little bit worried that, hey, what if things change, or what if I don't want to have my job at the hospital anymore in 5 years and join a private
Totally.
practice? So I recommend a side fund. And so the way to think about a side fund is looking at your payments in an income-driven repayment program. Let's say that your monthly payments were $1,000 a month, okay? And so you look at what that number is, and then take what would your payments look like if you private refinance to a 10-year private student loan, and what that payment is. Maybe it's $3,000 a month. So what I would recommend doing is putting, like, whatever that difference is between the federal required payment and the private student loan payment, you could put that in a side fund, right? Or maybe it's in mutual funds or an ETF or whatever
Sure.
your preferred investment account is, so that over time you're kind of building this nest egg in case that if it doesn't work out, you have recourse on hand to be able to pay that down. And that works as a safety net. And if PSLF works as it should, you've got a couple $100,000, or somewhere in the $100,000 range that you can use for a multitude of different things.
Yeah, that's wonderful. I think that if I were in the position of wanting to pursue PSLF, I think having the safety in the back of my mind of having that side fund would be very reassuring. And like you said, being able to invest some of it if you feel comfortable doing so. Or perhaps if you want a pretty safe, low risk option, maybe looking into a high yield savings account and have your funds kind of sit in there, but at least earning some interest over the years too.
Mm-hmm.
I believe we've touched a little bit on this so far, but if a new PA is not going to aim for PSLF, does refinancing with a private lender often make the most sense for many of them? Or in what particular cases would an IDR plan be something to consider?
Yeah, the situations that I was talking about earlier, if your debt to income is 3 times or 4 times, your income, I think that is a case where you could be looking to stay on that long-term taxable forgiveness
Sure.
track, where you're going to be making about 20 years of payments. But for any of those of you, and that's assuming that you don't work at a nonprofit, because if you did work at a nonprofit, you'd just do PSLF and be done in 10
Definitely.
years. And so then for those of you that have better, your income's 100,000 and your debt's 100,000, definitely I would look into private refinancing. I would no longer be paying that 6, 7, 8% interest rate when you're just going to end up paying this down the old school way. So that is really a shoe-in for somebody to refinance. And that can generally be done right as you finish school, or right as you finish when you're starting a training, if you end up going into a training period. And you no longer want to be paying that higher interest rate if you don't have to.
Yeah, I completely agree. That's great. So Andrew, thank you so much for showing your value to the listeners today. I think that there's going to be so many PAs out there that can really benefit from studentloanadvice.com. But how else do you feel like you can help our listeners that, are coming out of PA school? They may not have a ton of student loans. They just kind of feel stuck. They have so many options as to formulate a plan to start tackling those student loans. How do you feel like that you can help them formulate a plan?
Yeah, that's what I do every day is I meet with PAs, doctors, dentists, healthcare professionals, and other high earners that have a lot of debt, and I help them get an optimal plan, understand, all these different questions of where do I start, right? Yeah. And should I refinance? Should I do public service loan forgiveness? And just helping them understand all the range of their different options. And I really help them get lined up to the optimal plan. And, aside from this one-on-one consultation, I create a customized plan for you that you can own, that you can play around with the numbers. And I also provide you with email follow-up, should any other questions arise. So that those are often people some that are like, I have no idea where to start, and others that they have a plan, but they just want to make sure that this is well-oiled and the best one that they can be on.
Wonderful. Thank you so much. And for the listeners out there, for the PAs who are either new grads or are PA students about to graduate, or perhaps you have been paying for a year or so and you still want a little bit more advice on your student loans and repayment options, you can connect to Andrew by going to studentloanadvice.com/PAFI, and you can find him there and connect. But how else, Andrew, can the listeners connect with you?
Yeah, that's a great way there. Go to our website. You can also find me on Instagram. It's Student Loan Advice. Or you can even reach out to me via email. My email is andrew@studentloanadvice.com. So if you think you have some questions that aren't too complex, you can also do that, and I'd be happy to help you out.
Awesome. Thank you. I really appreciate the service that you are providing for PAs. I think that it's so important and great that you're doing that. So thank you so much for taking the time to share your expertise today, Andrew.
Thanks for having me on, Kat. Appreciate it.
Thank you for tuning in, and I hope that you decide to continue to join me along this journey of becoming a PA the FI way. Please take a moment to press the subscribe button on the platform that you are listening to this on, but more importantly, consider sharing with another current or future PA that could benefit from the information that we reviewed in this episode. Take care and have a great rest of your day. Until next time.